If you're waiting for Florida's home prices to crash, February's numbers still aren't telling that story. But if you're wondering whether buyers are gaining more leverage in the market, we're starting to see some subtle shifts. Today, I'm breaking down the February 2026 single-family housing market, starting with Florida statewide, then Miami-Dade, Broward, and Palm Beach County, so you can clearly see and understand what's happening and what it means for you. Now, let's start statewide. Florida is currently sitting at 4.8 months of supply. A balanced market is typically between 5 and 6 months. So at 4.8 months, Florida is still leaning slightly towards seller territory, but much closer to a balanced market than it was during the pandemic years. Inventory increased through much of 2025 and has been fluctuating as we move into 2026. What we're seeing right now is a market that is stabilizing, not overheating and not collapsing. Now, let's look at pricing. Florida's median sale price is 412,000, which is down 0.7% year over year. That's not a crash. That is price stability. As supply increases and buyers regain negotiating power, the market tends to flatten out, and that's exactly what these numbers are showing. The snapshot reinforces this. Median price is at 412,000. Closed sales are at 18,379, up 3.9% year over year. Inventory stands at 103,339 active listings. Month supply is at 4.8 months, and median time to contract is 59 days. And here's what that tells us. Florida is no longer the extreme seller's market it was a few years ago. Homes are taking longer to sell, and buyers have more options than they did during the pandemic surge. But closed sales are still rising year over year, which means that demand is still there. Buyers are getting breathing room. Sellers can still sell, but pricing strategy is becoming more important. This is what normalizing housing market looks like. Now, let's zoom into Miami-Dade. In February, Miami-Dade's median price is at 685,000, 4.6% year over year. Closed sales are at 733, up 4.3%. Inventory is 5,310 active listings, up 3.3%, and month supply is at 6.2 months. At 6.2 of month supply, Miami-Dade is leaning slightly towards the buyer territory. Buyers have more options than they did last year. But here's the interesting part. Even with inventory expanding, prices are still going up year over year. That suggests demand, especially from higher income buyers and investors, is still supporting this market. This isn't a weak market. It's a more balanced and disciplined one. Now, let's compare that with Broward County. In Broward, the median price is 620,000, up 1.6% year over year. Closed sales are at 811, up 1.1%. Inventory is 4,931 active listings, down about 8%, and month supply is around 5 months. Broward is sitting almost exactly where economists define balanced market. Month supply is right around 5 months. Prices are still slightly higher than last year, but homes are taking longer to sell, and buyers are negotiating more. In a balanced market like this, pricing accuracy becomes critical. Well-priced homes will move. Overpriced homes are gonna sit. Now, let's look at Palm Beach County. Palm Beach's median price is 675,000, up 4.3% year over year. Closed sales are at 1,089, up 7.9%. Inventory is 5,749 active listings, down 4.6%, and month supply is 4.9 months. Palm Beach continues to show strong resilience. Inventory is lower than last year, and closed sales are going up. Median price is still climbing as well. So while other markets are moving toward balance, Palm Beach is showing continued demand strength, especially in higher price ranges. This market is not heavily tilted towards buyers. It's closer to balance with pockets of strong seller demand. Here's the big picture. Florida statewide is continuing to normalize. Miami-Dade has expanded inventory and more buyer leverage, but prices are still going up. Broward is sitting very close to balanced territory. Palm Beach is showing strong demand with rising prices and tightening supply. This is not the frenzy of 2021, but it's also not a distressed market. It's a healthier, more sustainable housing market. If you're buying, your leverage will depend heavily on the county and the price range. If you're selling, pricing strategy matters more than ever. If you want help navigating your specific area, reach out. Thank you for tuning in to Francisco's Key Insights. I'll see you next time.